Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Oh, how you doing, guys? My name is Kool-Aid-Man100X. Welcome to Black Money. Black people, listen. We're going to be reviewing Five Below, right? The competitors to Dollar Tree, Family Dollar, and Dollar General. I actually want to look into this company, actually. So the first thing we're going to be looking into, like I always say, is we want to make sure this company pays dividend, because you want to put in what you put out. So that's what I like to do. So we want to plainly look up, does Below pay dividends? And they pay dividends. They actually do not pay any dividends, which is a no-go for me. Actually look up Five Below just in case. They do not pay any dividends to you. So this is all based on capital gain. So off rip, no. No, we're not going to invest in that. No. So the actual charts and overview, let's look at that. So we actually got a little overview. Market cap 1.12 billion, which is decent, high, whatever. Let's look into these charts. Y'all know me. We're going to be looking into the 6-month value, 1 year, 5 and max. So we're going to be clicking on first is 6 months. So 6 months. God, this is interesting for a company that doesn't pay any dividends. That is wild. They've been doing really good. The only low tick they had was back in November 2025, but they've been thriving. I think this is what got Dollar Tree and Dollar General kind of like, interesting. Let's look deeper. So let's go into a year value. So what y'all did in a year is interesting to me. So interesting. So in 2025, y'all still was getting an uptick. Only hit, I don't even consider that a hit, like 8%. Damn, you bring that right back up. So, God, y'all, oh man, Five Below is pretty decent. Price tag, but man, if you solely betting on them, a hell of a bet. I mean, only time pandemic 2024, 2025, that was about it, everybody. But God, from what, April? How? Amazing. And max overall of the company, decent. This is not bad. If you got a spare $200, hey, I just throw it in there. They might crack to 3. If they getting this much of an uptick in Five Below, I can't even really blame them as far as the charts is concerned. I was expecting more red, but wow. So they don't pay any dividends. The charts are phenomenal. So we actually look at the 5-year, 6-month, 1 year deal and the max. So they're a company to invest in. Now we're going to be looking into the long-term value. So we're going to be looking into the financials. Y'all know me. We get to the down and dirty. So we look into the financials. We go to the cash flow section. The first thing we're going to be looking into is the net income. Man, this is decent. They started off at 41 mil. They just came out basically 42. Jumped that up to another mil. Dropped tragically because of the pandemic, I suppose. But man, the jump right back up. Interesting. Have to say. Let's look for the cash operations. So the cash operations, 132, 93. Was in the hole, but God, they got out that hole pretty deep, which is 440. That's something to think about. 440. They was in the negative because of the, everything. So for them to come out of this to this, something to think about. Looking for the cash operations. So they put bread in their operations to get that boy fully up and running. So they dumped into that to get that boy going. So I don't blame them for that at all. That is shoot. That's probably why the charts were so green, because they put money back into their company, which is not bad. Change of inventories. Well, it's change of inventories negative. I can see that, but they came out the hole pretty decent. I don't know why there's this one here. They changed the inventory. I think that's because of the tariff situation. So, but that's not bad to come out of this hole. I can't blame them for that at all. That's decent. Plus, what was going on? Nothing can move, nothing can travel. So they took a little bit of a hit. All companies did. So I'm not really mad about that at all. A little bit hit somewhat for the change of inventories. I can't really say for cash from investing. Negative 44. Back in the negative and the negative. So y'all ain't got no cash investing. Y'all was in the hole, so I guess y'all coming back out the hole. So okay. Not good, but something to look into, I guess. Something to take account of, but that's not good because y'all buying back the company, y'all. I would say putting all the money back into the company. I mean, that's the only way, but y'all ain't investing anything in that money. Y'all ain't invest none of it. Y'all just put it right back into people. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Which, don't get me wrong, is very, very good. So cash finance. Don't get me wrong, for cash finance. So, all right. So we're looking into the cash for investing. So we're looking at financing. So they pretty much own their property. So they're in the negative. I can see this. I can see this being okay because Five Below, they own their properties. I don't believe they run anything, and they got big properties. So they got what, that's what I said. The inventory is decent. So I can see that coming into play. I don't have no problem with that at all. That's decent for financing because they're insuring all it. They're insuring all their inventory. So I can see that being a big thing as well. So the free cash flow, let's look at this. Free cash flow, 100. That's not good. That's good. 26, that drop. Woo. Okay. Got right back out of it. I love how quick they can. This is what I love about Five Below after reading this. They will get in the hole, get right back out of it. Get in the hole, get right back out, which is not good, but still, if not, they make they go to double out of it. So, which is very good. So if there was on 149 mil, they jump right back out of that boy plus more. So the unlevering cash, the money they got, decent whole. Okay. It's the same price, basically the same. So they got this is what they got total, basically. I ain't got no problem with that. That's decent. That's not bad. This is a company that just, yo, we gotta lock in to get out this hole. Which, not bad. I have to say it's not bad for the company. So, we're looking at the balance sheet. So let's look at the inventory. This is what I want to know. Now, this is where it's getting interesting. So the inventory started off at 702, 799, 1 billion. That's why I said they clocking. They putting more money in inventory, 846. So they died down a little bit. So now they're trying to expand. So I can see that. So yeah, it was at 1 point built. So Five Below ain't playing. They putting bread in their inventory, which is not bad at all. They put money in their inventory. So that's not a problem at all. I can commend them on that. Total current assets. Now, this is beautiful. You never seen a company with total current assets of they start off at 1.47 mil, 158, 176, 192. So they steady expanding. So the more they expand, the more assets they get, the more they invest into the company. So basically they taking all their profits and just dumping it back into Five Below. Just they make a meal, put the meal right back into Five Below, basically. So that is commendable, I would say. And not bad at all. This is a company. I see why they don't pay dividends because shoot, they trying to keep flooding it, basically. The total other long-term use here. I said the current expenses, that's what I skipped over, which is 140, 200 mil, 3. Their expenses are very low. That is that is amazing. You never seen a company with expenses this low. So they started off 1, 2. I think the uptick they went down. So they spent less in this year than they did. Wow. That is good. Actually, that is good. Invest in, that is good. Capital gain, different. Okay. Let's look at the total assets. What y'all got? Hella good assets. So they started off 4.45, 4.6, 4.7, 4.9. They steady. They put money in it. I can't knock them for that. They see the uptick. They see the people coming to the stores like clockwork. They got very big stores. I've been to a Five Below, very big stores, and they saw multiple things, Five and Below. So they profiting. They were really profiting. Really profiting off the total assets, man. Total assets, they are probably the best ones out of Dollar General and Dollar Tree. You ain't gonna see that. That's why Five Below is coming up fast. So that's something to think about too as well. Let's look at y'all earnings. See what y'all got. Yeah. Now, this is really good. All they had as far as I always look at the revenue surprise and revenues here and the EPS, but mainly this. So only had in 1 year. They only had 4 bad percentages, but that's only 289, 14%. But God, look at the uptick. 97, 5.26, 42, 3, 5. Went up to 165%. 82%. They went from 60 to dude. It's good. Very decent. Very decent. And we have to look at that being a big move for them, man. Because the max is crazy. I can see this company growing. Very growing. So we're looking at you already know, we're going to perplexity. Let's look at the key issues. So Five Below value, organ position, and ability to diverse in supply chain as it absorb the tariffs. Yeah, I figured that the tariffs related costs and pressure rather than full price resales and upgrade to BOF securities. And the bank reflects the confidence in the company and margin resisting and growth and trajectory of the site because they buying everything in-house. Everything in America they buying. They ain't doing nothing outside. That's why they making so much money. So that's another thing too, good on their part of doing that. And that's pretty cool. So, that's for the bullish view and bearish view. It tariffs related costs remain material risk and some squeeze Five Below already thin margin with the company, heavily importing goods and costing the price. Pressure supply chain could undermine the profitability, creating down risk and consequences of earning estimate. Now, this is interesting because for them to pull off what they're doing inside of the United States and they not really, cause this is nothing. The tariffs, they're like, all right, skip it. We just gonna buy stuff in house. So basically they buying stuff in house, the toilet paper stuff, or if not, manufacturing a company to do it in house of the United States of America. So they ain't really worried about that. They're like, yeah, we can buy stuff overseas, but it'll cost less, but we taking the hit. So we just gonna buy everything in house. So
what is an analyst consensus? Analyst consensus refers to the average of different analysts' estimates about a stock's or security's performance, particularly regarding future earnings or financial metrics. It is an aggregated estimate that helps investors gauge market expectations and is crucial for financial communication. This consensus can also assist in identifying forecast errors made by management.
So toilet paper, whoever it is, come work for us, basically. Come sell it our stuff. So that's what they're doing. So overall, the tariffs really doesn't matter to Five Below because they're still making profit regardless of how they're doing. So that's pretty good as well. So let's look into the analysis consensus, which I always end with this video. Is it a buy or not? So let's go back. Always put this in. So as you see here, we only read one line. So outlook for Five Below Inc. Imagine 20 is a moderate buy or buy. So we actually look at that target, stuff like that. So it's a buy. It's a moderate buy. So the only reason that it's a moderate buy because it doesn't pay dividends. So you mess with capital gain, but if you want to, I will go index fund or ETF But if you're solely investing in the Five Below by itself, this is gonna hurt your pockets. This is because it's 219.50 and they're still growing. So if they grow, and this is just a max. So let's say in another 5 years, is we still gonna get this over 20% boost? This is just in 5 years. What are they gonna do in the next 5 years? Is that gonna go up even higher? So I would solely try to invest this into an ETF or index fund if they have it. Just check an index fund, get it, and they gonna blow your index fund up. They really are. So I would definitely look into that if you can. So look into that value of the company. I would say it's a buy, long-term buy, ETF and ETF buy. Trading, very good because you can trade on the capital. But just solely investing into it, no. Long-term, no. Portfolio, no. But trading, yes. ETF, yes. Index fund, yes. That's pretty much it. So I hope you enjoyed the video. I'm going to catch you guys on the next one.